In 1958, Congress wrote a tax election into the federal code worth thousands of dollars a year to every self-employed American and never told a single one of them it existed. No announcement, no plain language mailer, no line on your Schedule C that says this applies to you, just silence. And the savings were already being collected by the people who knew. Here is what the government will tell you. You start a business. You file a Schedule C at the end of the year, you pay income tax on your profits, and then you pay self-employment tax on top of that. 15.3% on everything. Whether you actually needed that money or not, whether you paid yourself or not, that number is not optional. It funds Social Security and Medicare, and you pay both the employer and employee share because, as a sole proprietor, you are both. In 2024, for someone making $150,000, that is roughly $21,000 before a single dollar of income tax. That is the world they built for you. Now here is what Subchapter S of the Internal Revenue Code actually allows. You file a single form, Form 2553, 2 pages. You elect to have your LLC or corporation taxed as an S-corporation. What changes is this: you split your income. You pay yourself a reasonable salary, call it $60,000. You pay self-employment tax on that $60,000. The remaining $90,000 comes to you as a distribution, a shareholder distribution. And the IRS does not touch that $90,000 with self-employment tax. Not a loophole, not a gray area. Written directly into the code since 1958. On that same $150,000 year, your self-employment tax bill drops from $21,000 to under $9,000. You have kept $12,000 that you were handing over. Do that for 10 years. That is $120,000. That number is not theoretical. Accountants have been running it for their clients for decades. The question is why you were never told. The official explanation is complexity. S-Corp carry compliance costs, payroll, quarterly filings, additional accounting. The IRS argues the rules exist for a reason. The reasonable salary requirement prevents abuse, and technically, anyone can look this up. It is public record. Form 2553 is on the IRS website right now. But here is where the official explanation starts to fall apart. The election has a deadline. You must file within 75 days of starting your business or before March 15th of the tax year. Miss it by a single day and you are told the window is closed. Millions of small business owners miss that window. Most of them never knew it existed in the first place. And when they found out, they were told they were too late. They were not told the rest. In 2013, the IRS quietly issued Revenue Procedure 2013-30. No press conference, no headline. It consolidated a relief procedure that had existed in scattered pieces for years. And what it says is this: if you miss the S-Corp election deadline, you can file retroactively. Not just a few weeks late, years late. The procedure allows a business owner to go back up to 3 years and 75 days and claim the election as though it had been filed on time. With documentation, with a reasonable explanation, the IRS will treat your company as having been an S-corporation the entire time. Someone who opened their business in 2022 missed the deadline and is reading this today. They can potentially still make this election retroactive to the month they started. The procedure requires something called reasonable cause. The IRS cannot reward naked convenience, but the definition of reasonable cause is broad. Accountants have successfully filed these retroactive elections for clients whose only explanation was, "I did not know." That is the standard. I didn't know. Now go back to that number from the opening. $12,000 a year, sitting in an election that anyone can make. Multiply that by the 27 million sole proprietors filing returns in the United States right now. The IRS is not hiding Form 2553. You can download it tonight. But the system built around it, the tax prep chains, the software that files your Schedule C and moves on, the preparers who see you once a year in February, none of it prompts you. None of it flags the election. None of it says, before you file this way, do you know there is another way? Complex returns cost more. A Schedule C is one form, An S-Corp with payroll and quarterly filings is a recurring engagement that runs year-round. The incentive to inform you flows in one direction, and it is not yours. The people who benefited from your silence are not mysterious. They are the preparers who charged you to file the simple return and waited for you at the same desk next April. This is not a conspiracy. It is a structure where information flows toward those who can afford advisors who already possess it and stalls everywhere else. Form 2553 has existed since 1958. The retroactive relief procedure has existed for over a decade. The math has never been complicated. So the question is not whether the election works. The question is why, in 66 years, no one ever put it on a line you were handed and asked you to check. What else is already written and just waiting for you to find it?